So the financial world is currently on edge. You know, the cost of borrowing money, it continues to soar. So the Federal Reserve, once again, on March 22nd, hiked the interest rates, a quarter point. Now, despite the fact that the banking crisis that we're currently facing is the most intense since the Great Recession. Now, my name's Rock Daniels. I'm the Bluegrass Realtor. So let's stay connected. Hit that subscribe button. So the Wall Street Journal, they wrote that the Fed Chair, Jerome Powell, is essentially sitting there walking that tightrope, attempting to balance the fight against inflation while protecting the financial system as a whole. Now, this balancing act, it's a strategy that's fraught with risk, as the Journal pointed out to us. Now, one danger is that the Fed's lender of last resort activities may prove insufficient to control the larger bank panic or bank runs if one develops, prompting pressure for sudden easing of these interest rates, no matter what the inflation rate might be at that time. That'd be bad. Now, the Fed, they could be forced to ease those interest rates before they actually conquer inflation. Now, this balancing act is certainly precarious and ramifications are very enormous, all right? So the Federal Reserve is walking that fine line, like I said, attempting to tell us that the banking crisis has eased, but also that it is keeping a close eye on the situation and the impact that it's going to have on the overall economy. Now, while the Fed has raised rates 9 times, it takes about a year, as we know, for this to impact those higher interest rates to be felt. Now, this is something that we're beginning to feel, and it's a number of interest rate sensitive segments of our economy, such as real estate and the auto industry, are really feeling it. But we're expecting to see the economy continue to slow. And I think that we're going to see a recession later on this year. And so many people do. Now, one area that seems to be holding tight is the very tight labor market. And we continue to see jobs created. We continue to see people leaving one job, going to a different job, trying to be competitive. You know, employers trying to be competitive with salaries. And as a result, this is the offset that appears to be a weaker economy for me. Now, cutting interest rates is a possibility that's been discussed by many in this industry, but some experts predict that the Federal Reserve will be cutting interest rates by the 4th of July weekend this year. Now, others like Nancy Lazar from Pipeline Sandler, they predict a recession at the end of this year with cuts starting in 2024. Now, there is no doubt that this is really a balancing act and the Federal Reserve is walking it tightly. Now, we are going to see a slowing of the economy. Higher interest rates have represented a shock for many businesses. Another warning sign to be aware of is the $1 trillion of debt that will be rolled over. Now, this debt will come with higher interest rates because rates have been rising. Now, when businesses were paying 4% for their debt, but now they're paying 9% or higher and continuing to rise, that is a big deal, people. All right, bankruptcies are likely to occur this year as a result. Now, the White House, they see the economy completely different, with Karine Jean-Pierre, or whatever her name is, stating that they don't see a recession or a pre-recession. They see a strong economy, and it's because of the work of President Biden and what he's done. However, the monthly numbers show the economy is certainly slowing down and is likely to continue to slow down. A recession is pretty much, we're baking the cake, people, you know, and economists have been speaking about this for a long time. Now, Elizabeth Warren is among those who do not like what Jerome Powell is doing at all. She called for his head, stating that she believes the United States is headed for a recession. She is a believer in that, and that Jerome Powell is trying to drive this recession. She believes that he is a dangerous man and shouldn't even have his job. However, it's important to note that, in my opinion, nobody wants to drive the economy into a recession. You know, we just waited too long to start raising these interest rates. You know, the Fed made major mistakes by keeping those interest rates as low as they were throughout the pandemic for as long as they did. You know, with interest rates at 0 for 15 years and a sudden hike to 5% in 11 months, that was a shock. And that impacted many businesses and will continue to impact customers. Now, it's obvious, I think, anybody who looks at the data, that we're seeing tough times ahead, and we need to prepare ourselves for those tough times. Now, my name is Rock Daniels. I am the Bluegrass Realtor for all your real estate needs in Central Kentucky. I want to stay connected with you, so please take a second, subscribe. Thank you so much for stopping by, and I look forward to seeing you guys again soon. Have a wonderful day.